Hello, everyone, and welcome back to another episode of the Daily Crypto Byte. Today is Monday, February 28th. Markets starting off today green, but it's still plenty of conflict going on in Europe. That's definitely weighing on the market, so plenty to dive into today. But before we do, CJ, how are you doing today, my friend?
Doing well, Monty. Yeah, certain assets are green, other assets are very red, depending on what you're looking at. But yeah, getting a nice little bump here this morning in Bitcoin and a lot of the prices, in just like regular asset markets overall. I want to hop to a recent article that I do believe is kind of responsible for that short-term increase in price that we've seen, and that is the Swiss defense minister says we have concluded that the use of Russian nuclear weapons is relatively unlikely, and the population should not be afraid. So, it's a headline, but it was enough to calm markets and lead to an interesting increase above 39,000 here for Bitcoin. Really, that 40K level has been so strong, and I'm looking forward to, oh yeah, peace talk underway potentially. We'll see how that comes through. But yeah, looking to go into some good charts as well and just break down the situation a little bit more.
Yeah, CJ, it's a pretty sad state of affairs when the headline that we're not having a nuclear war is a positive catalyst, or like the most positive news we've had in the last couple of days here. It's scary times, and this weekend was very weird. Obviously we haven't really lived through any major wars or anything like that, but the consequences of this conflict between Russia and Ukraine obviously is having massive implications on the Russian stock market, the ruble, falling tremendously hard. Also, just wanted to quickly share this video. CJ and I were talking about this one that we saw over the weekend on Twitter and Reddit, and this is just a video of Russians finding out the sanctions on the SWIFT ban and just flooding the banks and essentially just making a run on the banks here. I mean, just look at these lines. People are clamoring to get their money out of the banks, for obvious reasons. And this is going to have long-lasting effects on, not only the Russian economy, but likely the larger European economy as well. But, this is just sad to see these Russian citizens that, more or less, most of these people had nothing to do or no say in this conflict are now forced to, just take their money out and, hope for the best because their economy is tanking, their currency is being devalued, and, their country is on the brink of a major, major war. So scary, scary stuff there. Just tying that in with another headline, Ukraine, like we talked about on Friday, they tweeted that they're now accepting cryptocurrency and Bitcoin donations. Over the weekend, $12 million worth of Bitcoin, Ethereum, and USDT poured in to their wallet addresses. So very, very good stuff, to see this sort of generous nature from the crypto audience. But also one other thing as well that I found to be pretty interesting is that crypto exchanges consider Ukraine's call to freeze Russia's Bitcoin. This, is something that we talked about a little bit last week. FTX gave $25 to each Ukrainian citizen, and CJ, you joked that they should take $50 away, or that someone on Twitter said they should take $50 away
Yeah, well,
from
I did
Russian.
not say that. I did not say that.
Yeah, someone on Twitter said they should take 50 away from Russian citizens. But since then, there's actually been genuine outcry for them to freeze the accounts of anyone based in Russia. Some exchanges have taken that stance, but I've thought that CZ and Binance had an interesting stance on this. They won't freeze Russians' Bitcoin, and they said they do not plan to freeze assets by Russia because this would contradict cryptocurrency's main principles of financial freedom. And I agree. That's kind of a the classic slippery slope where if you're willing to bend on your rules for this, even though it is obviously an instance of global wrongdoing from Putin and Russia, it doesn't matter. That's not the point of crypto. And they basically said we're not going to unilaterally freeze millions of innocent users' accounts. Crypto is meant to provide greater financial freedom for people across the globe, and essentially banning all Russian accounts unilaterally would directly contradict everything that crypto stands for. So I agree with that stance that that's not the way to approach this. I think that donating to the Ukrainian address is the best thing you can do if you're a crypto holder. But yeah, some interesting headlines, and that's led to some interesting price action. Anything that you're looking at here as we start off the week today, CJ?
Yeah, a lot of assets to discuss. Also, Jesse Powell of Kraken had a really long thread about that same concept, that basically taking the same point of view as CZ, not going to mess with transactions even if they are coming from Russia or Russian accounts. Here's the DXY. It's been bullish, ever since last week. Really are finding some resistance though at the top of the range. Kind of seeing some bearish wicks down, even with the crazy volatility in the FX market. Another one that I do want to take a look at is just oil, because it is starting to see a little bit of technical weakness. Doesn't mean it has to go through, of course, but you're beginning to see that divergence and that like bearish turnover within the RSI and momentum. Also, you have just some wicks and some sell pressure really at the $100 level. I do want to back this up and look at the 1 week, because I do believe this is like a multi-year resistance level with oil futures. So yeah, this is a level we have not touched since 2013. So we'll see if that acts as resistance. But this channel was basically where oil hung out in terms of price action all throughout 2009 to 2013. So we'll see if that level holds us some resistance. Not a whole lot to say about just U.S. equities, mainly just getting a rejection down from Friday's like high and reaction rally. So not a great sign to see that weakness this morning. Think about Bitcoin and kind of the reaction rally that we did get was on the back of that potential like ceasefire, or at least the potential to discuss a ceasefire. And we are getting a bullish engulfing candle and breaking out of this kind of tentative range that we've been in. Now, the thing that's just a little bit like we need to see a firm close above like this local range, in my view, in the short term. If you can get something where you can actually form support and potentially push higher and flip this level from a support to resistance, then you have a potential of taking out the 40K level and maybe even pushing higher. As of now, what we've seen each time we've gotten really overbought on RSI going into this local range of resistance is we've seen like these deviations where you'll break above it for a little while, you'll close back below, you'll try to test up again, but on that second retest of the rejection, like right here, for instance, that opens a short setup where you can basically play it and look for a return to the middle of that range there, basically at like 37. So we'll see if it has enough strength to break through 40. As you can see, it's tried many, many times and has created some higher lows. So maybe this is the one. Nonetheless, we are definitely pressing up against some critical levels here. So interested in your thoughts as well, Monty.
Yeah, thanks, CJ. One thing that we talked about a little bit last week, and I think that is pretty evident when you look at shorter time frames, is the sort of relationship we've seen between Bitcoin and the Qs. So this orange line here is the Qs. Obviously, the candles are Bitcoin's price action. And one thing that was pretty obvious is that when we had on last Thursday Biden, giving that speech, the Qs made a strong rebound that translated to positive price action for Bitcoin. But since then, and since we kind of reached that critical level that you're just talking about, CJ, the Qs have been more or less flat. I think in order for Bitcoin to climb above that 40K level, we're going to need to see a continuation of positive price action in the Qs. That was kind of my stance last week, and I still think that's the case this week. As you can see now, we're looking at the 30-minute chart here. Qs turning down a bit, Bitcoin turning down as well, right at that critical level of 40K. So I just want to keep an eye on the Qs today. I think that's going to be an important thing to watch. As you can see here, we're just pulling back a little bit after, starting the day up. So I think that that's what we're going to need to see in order for Bitcoin to break above that critical 40K level. Is just, more risk on speculative behavior in the Qs. And that typically translates to more short-term speculation in Bitcoin as well. But like you said, CJ, right now pressing right up against that critical 40K level that we've kind of been flirting with since the weekend. So got to keep an eye on that. Obviously, if Bitcoin breaks above that level, I think that could have some big implications on the alts as well. So definitely worth keeping an eye on that level. But anything else you're keeping an eye on here as we start the week?
Just take a look at gold real quick, just in its relation to all of the events that have been going on. Gold has been more relevant in the past 2 weeks than it has in the past 2 years. But yeah, 30-minute chart, just looking at an intraday perspective, another example of that deviation where you go above, below, and then, you have that potential short prospect. Now we've kind of formed somewhat of a ascending triangle right at the base, looking to break above this midpoint, potentially test the top of the range. But either way, I'm not really interested in doing business or trading an asset when it's kind of in its middle of its range here. I'd much more rather, buy support or potentially short resistance at these particular levels. But just wanted to take a look at that one. A lot of assets moving around, and just really interesting price action amid all the uncertainty. But yeah.
Yeah, absolutely, CJ. One last thing that I did want to just briefly mention here that we talked about last week was the Moscow exchange. This is one of the crazier looking charts that I've ever seen in my time looking at charts here. But we're reaching levels where we're kind of finding a little bit of support. It seems like a little bit of indecision, people trying to make the trade of a lifetime here and catch this dip. But ultimately, still very scary stuff. And it does look like this wants to continue going higher or going lower, excuse me. Even with this bounce up, sold into hard. And, like we pointed out with the run on the banks and, just what we've seen with the ruble falling 20%, there is major, major concern in this index. And, it's going to be interesting to watch that. CJ, I know you love to learn about, financial history. And, we read that book, Red Notice, a few months ago. These are the sort of instances where, you can make like trades of a lifetime. And I think we'll see, people trying to make those sort of trades. We'll see whenever you have this sort of, massive, massive volatility, there tends to be also lots of opportunity. And I just think that this is, a crazy world event. Although it is scary, it is from a technical perspective, very, very interesting to watch these charts and just kind of hypothesize about how, all these various things will kind of bleed into the market and affect the market over the next couple of months here. So I think that's all we got. Any parting words here as we wrap up today's episode?
Yeah. Was watching this one like old lecture or something from Soros around 2010 or something. And it was this concept that actually somebody had like reposted on Twitter because it's actually very relevant to like our current times, I think. And basically he was explaining how he got squeezed out of certain short positions in 2008 and how it cost him dearly, even though he was on the right side of the market and understood that he wanted short exposure because he thought we were going lower. There were too much leverage in certain positions. They weren't the greatest entries. And so he was forced to add margin or lower his position size or even close his positions at the wrong time, just because of these violent reaction rallies and this choppy price action. It happened in 2000 and 2001, going down, the stairs of the bear market, and it's happening right now. So, like, it's been a very difficult environment if you're not being very flexible and entering shorts in like the right time frame, because there are likely going to be violent reaction rallies on the way down, even if we keep going lower. So just something to keep in mind there. And even if you're right about the direction, it's the price action is not going to be as forgiving as it was in like a trending bull market. That's really all I have to say. But thanks.
Yeah, that's a great point. And as we're wrapping up the show here right now, CJ, as Chris points out in the chat, breaking above 40K. Looking pretty strong here today. So definitely worth keeping an eye on that level, seeing where traders take some profit. But we'll continue to do a deep dive into price action and take a look at some specific alts as well during our members only Doge of the day. But I think that's all we got here for today. Hopefully you guys have a great day, had a nice weekend, and are ready to rip and trade these markets. I know we are, but if you guys want to join CJ and I, you can do so at the link below me, markrebellion.com/try crypto. Got a pro charting service, a chat with traders from all around the world, extensive education curriculum, actionable trade insights, and a whole lot more. If you guys are interested in that, check it out at the link below us. And please don't forget to like and subscribe. Really helps out the channel. But yeah, that is all we got for today. Thank you guys so much for watching. We'll see you again tomorrow. Take care.